Hello and welcome to another episode of Market Watch. Today we have invited to an eminent professional in industry, Mr. Ravi Abesurya. He is the Group Director of Candor Holdings and at the same time he is the President of Colombo Stockbrokers Association. Welcome back to the Market Watch, Mr. Abesurya.
Thank you.
If I just touch on the property and the real estate market in Sri Lanka right now, I can see a lot of change has been happening, especially if you look at the Colombo skyline that has been changing at a rapid pace. So in this context, Mr. Abesurya, how do you look at the trends, new trends in the real estate market, and how do you look at those things going forward?
Yeah, I think Sri Lanka has been having a tremendous change in the skyline from 2009 after the war ended. And that's natural. If you look at countries like Singapore or Malaysia, you see a lot of high rises in the city. So we should see even more. And what I feel is there will be a lot more development activities happening with the port city, the megapolis, as well as the LRT, that is the light railway system, getting in place, maybe electrification of the railways. So there are a lot of things that are yet to come, and in fact we believe that in this area, that is where the CBD, the Central Business Development District, will have lot more activities, and also infrastructure, supporting infrastructure also should be there. So those things also has to come, like parks, walkways, what people could do after work. So lot more to come, and we have seen that in Singapore, like Orchard City, Orchard Road, a lot of shopping, malls. So there are a lot that will happen in Sri Lanka as well.
Right. If you look at the Colombo property prices, I think there is a lot of house going across saying that Colombo property prices are overheated. So what is your idea on that perspective?
Well, yes, we had a pent up demand, which is affecting the property prices, which is natural. I think our property prices have been growing at about 13% now. If you take 2016 year on year, there has been an increase of about 13% on the residential property. This year too is again about 13% for the first 6 months. So that's quite a growth in property values. Now the question I am not yet sure is whether this property value assessment done by central bank and published now to the public is from the property prices quoted by the seller, or whether the actual transaction price.
Right.
So there is two different things, because what is being quoted could be quite high,
Right.
because people want to quote a higher price and ultimately negotiate to a reasonable price, which is the transaction happens. So we see in these quoted prices always escalation in particularly land. So few years ago Colombo 7 was say 10 million, now is 15 to 17 million is quoted. So there is a big difference.
Yeah, Mr. Abesurya, in terms of the credit
Yeah.
flowing to this particular sector, we have seen an exponential growth over the last couple of years. Especially, I have seen at certain sources saying that if you look at the last 1 year credit of banks, more than 50% has been granted towards the property and the real estate sector.
Right.
In this context, number one, are banks safe right now? Because the general questions the people are just inquiring. And at the same time, in this context, what the future of the real estate sector?
Yeah, I think banking sector exposure to the real estate sector is a concern for any regulator. Now we have seen property bubbles that have happened in other countries, like the real estate bubble in US as well as in Australia and so on, that because property income is on the low side, and if the property value suddenly starts dropping, there is a risk to the financing institution, because they have lent at a certain price expectation and they may lend 70-80% of the property value. So if it drops by say 20%, in an environment where the property prices have been going up and up for a certain period and suddenly starts dropping fast, then there is a risk to the financial institution.
Right.
So, because you can't sell at the price that you have lent, so what happens is the loan is more than the value of the property.
Right.
So, at that situation, there is a risk. But we have not seen NPLs, that is non-performing loans, that of the loans that have been given to the property sector yet in Sri Lanka. But it has happened in other countries where certain property developers have gone bust because of various reasons, and then it devolved on the financial institution and they are at risk. And if
Right.
it is something that can happen on the systemic level, yes, it is a concern for the regulator. When you lend too much to one particular sector, there is a higher risk because of the sector exposure, because too much given to
Right.
the property. But we have not seen any of those numbers in Sri Lanka, because take for example today in Sydney, in Australia, they say they have lent the household debt in the property sector, it's about
Okay.
120 times the GDP. So that is exorbitant compared to even
Right.
US or UK. So Sri Lanka is nowhere there.
Nowhere yet, correct. And will you expect a sort of a lending cap which will impose from the central bank toward this sector, or how do you look at that?
Well, I think central bank is watching the numbers
Okay.
very carefully. There is a financial sector risk management committee which is appointed with all the stakeholders,
Okay.
where they look at these numbers and they may at time to time adjust the LTV so that there will be less risk by kind of limiting the amount of loans or leverage that is given to the property sector to the banking system. So I think it is very carefully managed, and we don't see a major risk at this particular moment unless some major unexpected calamity happens from an international issue, or in the country there is a major crisis. So other than that, in the current context, we don't see a major risk to the
Right.
because of the growth in the property sector and the loans. Because if you take the consumers, they are not taking lot of debt.
Right.
The developers, yes, they may be taking even loans as for normal company growth, saying we are borrowing for the the group's company, or not necessarily marked as property.
Right.
But the people who are buying property, they believe it's about 7% who are mortgaging. Majority are paying cash or directly purchasing property by paying on a installment basis rather than borrowing and investing in property.
Right.
It's a good thing.
Right. Moving forward, Mr. Abhiswari, if you look at the Colombo Port City project, which has become one of the most exciting projects right now, and perhaps that may lead to decide the Sri Lanka's next phase of growth even. So in this context, how do you look at this project, and what would be the impact to the economy going forward through this particular project?
I think it is one of the most significant projects. The total investment is US dollars 15 billion.
Right.
So the project reclamation of land is expected to complete by 2019.
Right.
And from that onwards, by 2021, you should see the construction happening. So there will be a lot of demand for labor. One of the shortcomings today is lack of construction sector labor. We are talking of bringing about 2,500 people from neighboring countries.
Right.
So there is that issue from that called labor shortage and increasing in cost. So this will have a magnify the impact to other developments. When
Yeah.
you have the port city also starts construction work, most probably they will have to bring the labor from abroad. But the port city price increase of land may have impact on the CBD as well, because
Right.
if the port city prices are going to be higher than normally what is being sold today in Colombo, so that could also have a impact of further increase.
Right.
But I believe there is a balance between supply and demand, and a lot of supply is to come, where we will see within the next 5 years about 5,000 condominium units are going to be coming in this CBD alone,
Right.
and I think 2,800 in the next year itself. By
Right.
2018, 2,800 units are
Right.
going to be available. This is long before the port city.
Right.
So there will be a lot of supply coming. But at the same time, now the port city is going to attract maybe 25 to 30,000 foreign passport holders. So that means they will have, if they are going, it's going to be the financial center. So there
Yeah.
will be a lot of people working there.
Yeah.
So then when various business activities happen in the port city, there will be a lot of opportunities, employment as well as growth in the city. So there will be
Natural
demand.
growth, definitely.
So it's supply and demand. We feel it's all depends on how they pan out.
Yeah.
Because if the government deliver on their promises, like I mentioned at the beginning about the light rail, transit railway, the electrification of the railways,
Yeah.
and the beautifying the city with support infrastructure. If those things happen, we will be able to attract a lot more foreigners who may want to come to Sri Lanka to retire. In certain countries, you invest $200,000, you are getting a passport,
Yeah.
permanent residency.
That's it.
So why can't Sri Lanka do that?
Of
So we will have a lot of people coming here for retirement as well.
Right.
So I see it all depends on how government policy implementation is going to be, because implementation is the key.
Key.
They deliver on what has been promised or what has been suggested in the 2025 vision. I think we will see a lot more growth in the property sector.
Very exciting. Moving forward, if you look at the 2018 budget 2018, we have seen a proposal to repeal the Land Restriction Act, which has restricted the foreign-owned companies to own property in Sri Lanka. That has been proposed to be repealed now. So, if it comes into the picture, so how does it affect to reshape the real estate sector? What is
Yeah.
your view?
See, the Land Restrictions and Alienation Act basically restricts foreign ownership to 49%, whether it is a listed company or private company. What I see in the budget is they have agreed to lift it for listed companies. So as long as it's a listed company, foreigners can own 100%,
Right.
but not private companies. I have not seen that. So there is a question whether that it also will go. But at the moment, what has been allowed is for condominiums lower than fourth floor, also foreigners can own. Previously, it was only above the fourth floor. So now fourth floor, second, first, third also is allowed for foreign investors.
Right.
But the bigger issue is in the budget is the VAT impact, which is a serious issue because the 15% VAT on the installment what people have agreed to pay will suddenly increase, so that when you purchase a property you are not putting 100% of the value straight away. Most of the people pay in installment basis over time because you have to earn and then pay. So because of that, what people pay on a monthly basis, which is agreed, the price is agreed, signed legally,
Okay.
as a legal document, suddenly will go up by 15% if the VAT applies to existing
Right.
properties. If the VAT is for new property, then the input VAT itself will reduce the total impact to the buyer,
Right.
because you can take out the input VAT and only charge for the difference, and that's how it is. VAT has to be applied on output minus the input, and that difference only should be charged to the cost
Yeah.
what is being sold. And now in the case of existing property, it's very difficult for the developer to bear it, because this is significant, 15% of the value, as well as it is going to create havoc for the people who have bought property, who has to now bear another 15%, which
Right.
they may have even agreed on loans, and suddenly you may not be able to cover that 15%. So it's a huge shock to the real estate condominium sector, because we are in Sri Lanka needing about 15,000 condominiums because there is a huge demand for affordable properties.
Right. Okay.
So now people have to go for vertical living. You can't expect
True.
land,
Yeah.
small houses to able to meet the demand.
Especially if you look at the urbanization has been happening at a rapid
Rapid
pace.
pace.
Yeah.
So we need people to stay closer to the city, because
Yeah.
transport, because of the traffic jam, is going to cost a lot. People want to have their kids' education, the tuition classes, so many things happening within the city. So they would prefer to stay closer to city. So it is difficult when you have suddenly a tax being brought in to particularly to the affordable housing, where whether you are paying 10 million or 15 million, even that
Okay.
will go up by 15%.
True,
So
true,
it's a significant
Yeah.
impact.
You mean to say there's no, time frame been defined yet in terms of this particular proposal? That means lack of clarity.
Lack of clarity and consistency in policy, because
Okay.
12 months ago we didn't have, well, 13 months ago we had VAT,
Okay.
12 months ago it was removed. So
Mhm.
after removing it again to bring it back
Yeah.
is completely inconsistent, because you don't keep changing
True.
policies so fast.
Yeah.
So you can understand if there was a regime change or some kind of a major change, because with the new Inland Revenue Bill, that was removed from the condominium housing, and now suddenly again this budget it has been brought back. So it looks very inconsistent.
Yeah. In a final note, Mr. Abezuri, if you look at the private equity opportunities in terms of the real estate or in other industries, post budget, how do you look at any opportunities with the private equity space, or what's your view on that?
Well, private equity opportunities are quite large. One of the key areas what we see in private equity is companies which have been borrowing because of the growth. The opportunities are humongous for a lot of companies, but they have put in a lot of effort to grow, but they have not put the equity. So the company may have started with, say, very small, 100,000 rupees or few million rupees, but the borrowings, because of the continuous growth over the last, say, 5-6 years after the war, has 600 million kind of, massive amount compared to the debt. So the debt to equity ratios are completely out of whack.
Sure.
So they need equity, because the country is growing at about 6-7% economically. So you need these companies to be funded with equity. The promoters alone may not be able to put that money, and the banks are at risk, because if there is a shock, then these companies will go bust, because they are too much of debt. EBITDA to interest to EBITDA is very high.
Right.
So this is the area I see a lot of opportunities for add value to the companies who seek private equity by not only finance but also know-how in financial discipline, systems, processes. So there is opportunities there, but at the same time promoters need to understand, they need to agree on realistic valuations, because their expectations are also too high, because private equity is coming in with new money, and the upside has to be shared. You can't have a situation where only the upside is only to the promoter, because new money means the company will start growing further, and that growth has to be shared between the new investors and the previous. You can't do a DCF valuation and come to the value which is 5 years to the future, and say, look, the company is worth today, so that whole upside is to the promoter. So that is not acceptable. So we need to have realistic expectations when you go to PE investors, but I
Right.
think opportunities are there.
Right, very optimistic view. Thank you so much, Mr. Abezuri, for being with us today, and hope to see you with another episode going forward. Thank you so much, viewers at home. See you next time with Market Watch.